Welcome back, everyone. This is the London session class on TopstepTV. My name is Deeyana Angelo, aka Market Stoker D. I am a Series 3 qualified trader, but everything you hear here is for educational purposes only. Bruno has already put up the risk disclosure, so have a read through that. Basically, don't follow any trades blindly. So if you don't have a plan that matches the same sort of trade or a similar trade, trade your plan, right? But today we're going to be talking about how the larger time frames might impact what is happening. So we have equities that are in rollover. We have crude oil rollover as well. So it's not going to be the easiest 2 weeks. Obviously, with crude oil, it tends to roll every month. Equities tend to roll every 3 months. So obviously, with crude oil, you probably get a decent amount of price action for about 3 weeks, and then it all just goes a little bit weird. So be careful today. We also have St. Patrick's Day, and it's also my older niece's birthday. So yeah, it should be quite interesting. Brand says, what is a Series 3 trader? It means that you pass an exam that is basically an entry into being an introducing broker or a CTA, maybe even a CPO. So basically you can start a professional career from there onwards. And it basically means that you're proving your knowledge about the futures markets. It's a pretty challenging test. So yeah, we've all had to do it. Whoever is on TopstepTV, I think most of us have got it now. That's not the first qualification that I held. I held something similar in the UK, which was like a 3-part thing. So you actually had to do 3 different exams. So it wasn't anything super new. However, obviously with the UK markets and the US markets being a little bit different, obviously you have to know regulations, you have to know strategies, you have to know a lot about options and spreads and a whole bunch of other things. So yeah, it's definitely an interesting thing. But one thing that you have to keep in mind is that once you have a Series 3, you can no longer call yourself a non-professional, because you know how you fill out those forms whenever you are signing up with a brokerage, and they say, are you a professional? And most people just say no, and then they get cheapest chips data feeds. That is not the case if you have a Series 3 license, so you have to declare yourself as a professional. Obviously, that kicks up all the fees. So yeah, if you are interested in doing that, just keep in mind that there is a little caveat there, that you are now a professional, effectively. What's my take on NQ? You know what? I don't really do NQ as my core market, and I believe that we have more than enough attention on NQ during the main broadcast. So let's take away from NQ for a minute. There are other markets out there, and especially ones that move during London. That's not going to be NQ on most days. We do have high volatility now, so everything is moving. But that's not the case. So just to give you a perspective, because there was somebody in chat who was like, NQ being quiet? Never. Well, when I started trading in 2013 on a prompt desk, NQ only had a range of about 75 points for the entire day, as opposed to over, I don't know, 500, 600, 700 points these days. Maybe even more. I haven't even looked at it. But by the same token, ES was moving only about like 6 to 12 ticks per day. So that was like barely like 4 points or something. So it does go quiet. We have been very fortunate to have the post-COVID volatility that kicked up and pretty much held through to this day. And now we have the new administration, so that's obviously causing quite a lot of it's obviously causing more volatility, which is kind of put a wrench in the works with some strategies that people use. But yeah, I'm not going to be talking about NQ. It's not my main market. And if you want NQ, just watch the main broadcast. Okay. So I'm going to talk about copper and platinum, which is what we trade over here. I also trade DAX, so I do trade an equity index, but we don't have DAX yet. On Topstep at some point we will, but for now it is not here. And I'm going to put a link up in the chat. So if you want the Eurex products to come to Topstep, please upvote that thing. Kai says 300 lot on crude 68.50. Okay, so that's going to happen in rollover. When you have rollover, and I do believe that today is going to be, or this week is going to be the last week of crude oil trading in the previous month. You're gonna have big orders coming through. Why? Because big boys have to roll out of the current month contract and go to the next contract. So naturally, what's going to happen? They will have these big orders on visible on the ladder because they have to bail. They have to bail, and you will see the same thing happening in equities when it's rollover time. Except there, you're probably going to see like 1,000 lots or something. And that's normal. Another thing that's normal is to have choppy price action during rollover. So I wouldn't expect smooth trends. I mean, of course they can happen, right? But usually during rollover, the volume is split between this month and the next month. And it just gets really patchy and really quite difficult to sustain a smooth trend. So even if there is some kind of a move in a single direction, it's very spiky. It's very spiky. It's got like, wicks all over the place. So yeah, we'll see. All right. Kai Dumber says, NQ hurts, come on, rollover. I mean, that takes, the equities rollover can take 2 weeks to complete. So I wouldn't be rushing it. Really wouldn't. Tushar Radke says, does being a professional essentially allow you to trade other people's money? Not really until you register yourself with, I think it's CFTC. So you have to actually register. But yes, it is the first step towards that. So the first step is to pass a Series 3. And then if you want to push it forward to actually open up your own investment funds, or even to become an analyst to basically tell others what to do with their money, there is an additional step where you go to the next governing body and say, hey, I want to be a CTA. And then there is an FBI check that you have to go through. There is a membership fee to pay. And then after that, you're a CTA. But at that point, you don't have to pass any more exam unless you specifically want to deal with securities or something, which is then another type of an exam. But for Series 3, if you just want to do futures outright, spreads, options on futures and stuff, that's it. It's the first step. So yes, in effect, it does. But if you actually want to be somebody who advises people, there's a background check to be made and some extra fees associated with it. And once that's all done, you can then start to either advise people and even, do like newsletters and stuff. Like, for example, whenever I see people advising levels and they don't have Series 3, that's not exactly legal. I don't know how many people are aware of that. So it's like, if it's some like rando on the internet who's like, yeah, I have this level over here. And unless they're actually registered to dish out advice and have at the very least Series 3, that's not within compliance and regulations, right? But hey, it is what it is. So just be careful out there. That's all I'm going to say. But yeah, Wes says the adults. Yeah, the adults that are closing out positions and moving contracts. Yeah. Gold, question mark. Gold is also going to be in rollover, I think. So let's have a look. Again, I'm not a huge fan of trading gold during this time because NYMEX is still the biggest thing COMEX is the biggest range for gold. And yeah, I mean, look at this horrible price action. So this is a 4-hour chart. If there was anything to be had here, there would be some sort of an obvious trend already on a 4 hours, but it just looks like a consolidation for now. So it's very undecided. We're sitting right below that 3K level. And right now I really wouldn't do anything with it because I think it's going to go higher, but I would like it to kind of do a bit of a sell-off first. And until that happens, I don't really want anything to do with it. It's just, buying it here, that would be buying the top. So even if it works, for people who are not really sure how to analyze a chart and diagnose a chart properly, that would probably be the worst outcome because it teaches you that it's okay to buy the top and that still works. So I would really just wait for this to happen. I didn't pull too many levels from gold, but I can have a little look-see. So we're opening below value with some gap. Obviously, there's a chance that we go up to the value low, which is currently set at around 3003.7. I mean, for now, that looks a little short to me. I seem to be having something that's attacking me right now, so I sound a bit weird, but we'll push through it. Yeah, so we have the core resistance at 3000, and then, like I said, that value low in and around a similar level to within about 40 ticks. I mean, 40 ticks on gold is really nothing these days. So yeah, I wouldn't do anything with it. Certainly wouldn't long it at this level until it sort of shakes out a little bit. So maybe more shorts and then maybe snipe it to the other side once things settle down. But this is really not the time of day to be doing that. If you're going to fish for reversals, that's likely to happen after 9 a.m. Central. 9 a.m. Central? Yeah. And right now it's just way too early for that. All right, platinum. Platinum is coming up to the value high from the inside. So what we had... we had open inside value. We're currently kind of sitting around Globex VWAP, and that's not really that enticing. But copper looks interesting to me for shorts. We had a put level at about 490, and we tried to get up to the value low and failed to actually get there on the first try. That left a pre-London Asia high. So if I was going to look for perfect ideal conditions, I would want to see this value low / GEX2 level at roughly 492 as a sort of a Frankfurt fake out thing, because this is a Frankfurt Exchange Open. And if you've watched these shows for a hot minute, you will know that very frequently you will get something called the Frankfurt fake out, which basically involves taking out the obvious Asia high or obvious Asia low and then reversing it. But that can happen anytime within the first sort of couple of hours of London, so it doesn't have to happen like immediately at the open. We have to go into Frankfurt fake out. So yeah, let's wait and see what they want to do. I mean, we're still not even done with the initial balance. I have a rule that I don't really trade before the initial balance is over and extended. So that is one of my primary rules, and every time I break it, it doesn't end well. I know that everybody's like, oh, but we want to see you trade, we want to see you click buttons. That's all very well, but I've got some rules that I need to follow, and that's one of them. So we can analyze levels, plan out trades, and then if a setup appears that speaks to one of my high posts, then we can jump on it, right? Elpar says, my HG Mentor Q level do not show GEX1 or GEX3. I have GEX2 the same. Any thoughts? What platform are you on? Are you TradingView, Bookmap? Because obviously they have it for all sorts of things. And when did you put them on? Because they have a new update. They usually update the levels, usually right after London Open. whenever I try to do it before, they sort of have it the day before, because these are end of day levels on there. So let me just have a look at the timestamp. Yeah, so I think the timestamp is okay. What does extended mean after IB? Well, it means we set initial balance and then we try and go outside of it. So you don't stay inside initial balance range, you try and get out of it. That is the other time frame participants, OTPs. So basically they are the ones who usually try to take something somewhere, and then we look at whether they succeed or fail. That is all auction process 101. Yeah. So extension of the initial balance range in the profile, it literally means to leave the range or attempts to leave the range. And then depending on whether they come back to the range or they manage to stay out of it, you can basically figure out which hypo you're going to run at that point. What time frames do you use with a 30-minute? So I use a 30-minute as a general outlook, and I'm going to say I use all of the time frames. So it really depends on what I'm trying to do. I use a concept called the OODA loops, or the OODA loops, however you want to explain it, or abbreviate it. That's basically looking at various time frames the way I do it, and making sure that you are getting all of the information that you're getting. Now that can probably be a little bit much if you're if you're a new trader and you're still like struggling with levels and setups. I can appreciate that it gets too much. It's kind of like learning to drive, right? So when the first time that you sit down in a car and you're like, well, oh my God, what do you mean? So now I have to, change gears, and I have to worry about the gas pedal, and I have to steering wheel, and then what? I also have to take care of the pedestrians and signs and traffic lights. Oh dear, that's a lot. So that's kind of how new traders feel. It's like you feel like you have so many things to think about, but then over time, it gets easier, right? So, over time, suddenly certain parts of driving the car become more automatic, so you're no longer thinking about them. You should aim for your trading to do the same thing. So at first it's very hard, and you're like, oh my God, I need to think of this line, and the auction, and the initial balance, and the value area from previous day, and oh my God, supply and demands, and average ranges, and blah. But eventually it just becomes, kind of like a habit. So it becomes the same. You're looking at the same thing over and over again. So it's not nearly as scary. And at that point, you can refine your entries and timings and stuff. So what I do for my overall multi-time frame analysis that you see here, I start on the monthly chart, which we don't really have fully here. So I start on a continuous contract monthly chart, just to see where we are. This is the weekly chart. Just see where we are in the overall structure, whether there's an obvious trend, whether we're maintaining or breaking some very, very large levels. Then I put that to the back of my brain, commit it to memory, and then I go down to the daily chart. So I'm like, where are we now? Well, we're sort of going towards this high here. We've already rejected it once. I can see it's a very large supply. So then that's another thing. So I'm like, okay, so we're heading towards the quarterly part of the previous swing. So that's important. Then I go to the 4-hour chart and I go, what has the Asia done? Not much, but it sort of looks like it might be attempting to maybe go higher. So we need to confirm that. But for now, no noticeable trend during Asia. It was pretty flat. After that, I fall down to the 30-minute chart and I look at the profile levels. So that is something I also do. So if it's an inside day, I'm a little bit careful with any trending moves, because inside days, by the rates of above 64%, typically end up as neutral day types. So knowing that piece of statistic, it kind of allows me to be more patient and just not jump into things that are not conducive to the statistics that I know about these sort of open sentiments. So from the larger time frame, there's a possibility of going higher, but the intraday sentiment for the Monday today does not quite match the same sentiment. So I need to sit and wait. But when it comes to the entries, if I'm looking for a setup, sometimes if I'm really sure that the setup is pretty strong, I might front run it, and I might do it from a 2-minute chart or a 100-tick chart, or any tool that I have available. And then after that, I will be waiting until the following amount of data to print. So if I was on a 100-tick chart, I may have a look at the 2-minute chart. After the 2-minute chart is done, I will go up to the 5-minute chart. Once that's done, I'm going to look at the 15-minute chart. Once that's done, I might go back to the 2-minute chart, and so on in cycles of sort of 100-tick, 2, 5-minute, 15. Now, all along, I do have bookmap on the other side, which shows me who's in control. And sometimes, if I'm on copper, I don't do that. I might look at the 15-minute chart. But copper is pretty directional and it's quite smooth, so I don't feel like I need to do that. Therefore, I will just do more of a swing type style of trading on copper, and I will frequently hold my copper trades about 3 to 4 hours. So I will typically take the levels from one of the options or from my value areas, and then just run that. No time frame required. It's a level. There's a reaction. Whichever time frame you want to use for a reaction is fine. But yeah, so you have to have somebody else looking at that same level. Because if nobody else with big pockets is looking at that level, you're then fighting the market participants that have a lot more money than us, right? So that's never a good thing. And in effect, we need to look at what they're doing and just try and piggyback onto their ideas. So hopefully that helps. Yeah, El Par says, ignore the question, just update the levels. Yeah, sometimes they're a little bit late. Like I said, they kind of go to London Open and then the indicator updates. So yeah. Worldwide Worker says, Dee, I know the opening 1 hour candle range is important in the New York session. Since you're mentioning it now, can you please comment on the relative importance of the initial balance in London Open? It's exactly the same. London session is the London session. New York session is the New York session. But it's the same thing, right? So for the first hour, usually is the market maker territory. They are typically not trying to take anything any particular way, but they're just kind of looking for the most obvious reference points and breaking through them to kind of grab some liquidity, to fill some orders and all of that. And it's what they do. It's what they do. And for that first hour, typically the market makers will be the most active. Obviously, they will stay active throughout the day, especially in this day and age when we have HFTs that have taken on the role of the locals. But this is why we see setups like the Frankie fake out, for example. But the same thing plays out during New York. You have the London low, and then, New York opens, and within the first hour, they break the London low. And then right after that, they do a failed auction once the initial balance is over. So why do you think that is? They're just grabbing whatever is around. And if you are not aware of that, and you're expecting the lows to be respected during the first hour, lows or the highs to be respected during the first hour of any exchange trading, you need to modify those expectations, because for the most part, they are levels of interest that market makers will smash and grab. And then, all the rest of the retail traders are sitting there crying because they've been stopped out, because they put their stops right underneath the stop. Their stops would be looking like, so let's use copper as a reference. So here's the Asia high, right? That's the Asia high. And then, you would use a stop that is, let's say you want to run a short, and you see this selling wick, and then you do a short, and you set your stop right at this high. So at some point, you will notice that that is not the best choice, because if they do get up there, if they're still hanging up in that area at London Open, like 9 times out of 10, they're going to go up, take that high, smash through it just a little bit, just to annoy everybody and make everybody absolutely miserable, and then they will reverse it. So what I like to do, when you see my trades, most of them with the stops, even if I'm entering, somewhere maybe a little bit later, even though I try not to, but, sometimes you can't exactly ask. My stops will actually look something like this, right? So then I'll be looking for a bigger swing. Whoops, I didn't mean to move all of that. Here we go. So I might be looking for a bigger swing, but basically my stop is not going to be up here. My stop is going to be pretty wide to account for the fact that they might grab it if I want to get involved ahead of that particular event. Now, today, because we have this value area and GEX2 just above that, I wouldn't even think of entering on the basis of this supply. I actually want to see that break if we can get it. And if not, maybe there's going to be another setup in the day. But for now, I don't see anything obvious here. So it's either that we get to these GEX1 levels and then maybe start to mess around. But ideally, I would like to see it down all the way to ADR low. Now, average session range low is actually 482.34. So I need to put that on as well. Hold on. 82.34. 35. Just round it up. There we go. So that could be something of interest. Let's delete these. For maybe some longs or something. So, we'll see. But either way, to me, this is like middle of nowhere right now. Brian says, what time is London Open? London Open was just an hour ago. So usually I don't like to trade during this time of the day, but we do have the daylight savings happening in the States. However, over here on this side of the pond, we don't open until, we don't change clocks until 30th of March. So we have this like disparity for nearly a whole month before we sync back up. So I usually like to run these sessions 90 minutes into the London session, because by then we already have an initial balance and there's a higher chance of me actually finding a trade. Otherwise, there's a lot of levels, planning, talking, making sure that I answer questions and all that good stuff before we can actually find a trade. Trader A says, what is ASR low? Average session range low. That is my concept. I use these session ranges as levels. They are projected quantitative lows and highs that are expected to play out based on a certain amount of days and the ranges that we established during regular trading hours. I know that concept is quite foreign to most. That is because that is my concept and I came up with it out of a need. I also modified the way I use ATR, so most people just use it as a line on the chart, like you can see over here. I use them as levels, and I use them as the average daily range. To me, is a level. It's a quantitative level. So, yeah. And the twist on that is the average session range low, which is basically just using the RTH, regular trading hours, or the hours of the session that you're trading, which is the case for London right now. Joe says, Dee, can you explain the 920 level in copper? 9200, you mean the value low? Yeah. So that's just the value low from Friday. So basically this is where London distribution curve was, and that's where the edges of it are located. Now, just by chance, or maybe not by chance, GEX2 is there already. Why? Well, because the edges of the distribution curve are very reactive, right? The edges of value areas are something that you expect to happen as a return to the mean, right? That's like the old distribution curve theory, that if you're far away from the distribution curve, you will snap back to the mean at some point. Like the markets are all about mean reversions and, snapping back to levels that make sense. The 920 level, 9200 level is one of them. So, one of my major levels is the test of the value area. Now, whether we accept value or we reject it and reverse from it, it's a matter of context. But, for now, if you look at the daily chart, we've had a reversal from a previous supply. So is it logical to ask for more downside? And is it logical to ask for a bit of a pullback intraday until we get to 492? I would say yes. But obviously, if that doesn't happen, I have some alternative levels. So, we now have the initial balance as well. But we also have VWAP, which is just under this 490 level in from the options. So for me, everything is a zone. So nothing is just like a singular price point. So when I'm looking at this chart, I see all of this as a potential zone. So that's like zone 1 to look for shorts. If that breaks, then I will have a failed auction. And maybe if there's like a retest of the initial balance low at the time that we failed the auction to the downside, so basically we're doing longs now, then I may have the opportunity to have a rotation all the way up to this side. If we manage to get up there, then my primary hypo is in force. I look at the events of the market as kind of an execution flow. If this happens, then what would need to happen to reach the next level? And how would that look? Would it be, a neutral day? Would it be just a single-sided auction? Would it be an auction fade? So, all of that plays a part in my systematic way of doing this. Tax is low in the UK, like around 20%. No. So once you get over a certain amount, taxes in the UK are 40% if you're not running it through a limited company. Now, most of my trading I run through a limited company since I had a very uncomfortable year where they taxed me for spread betting because I didn't have another job. And apparently when you don't have another job, then everything that you make is taxable. Nobody told you that at that time, but now it's kind of like, oh yeah, everybody knows that. So no, taxes in the UK are traditionally very high, and with the Labour government, they will probably get even higher. But no, the day trading, if you're not really trading much, like let's say that you are not making above 9 or 10 grand a year, you fall under the category of the free sort of amount that you get that's tax-free every year. And where that comes from, whether it's from a gift by someone, whether it's from day trading or a side hustle, it doesn't matter as long as it's like under that threshold. I think it's about 11K now. Like they do change it every so often, but there's a tax-free allowance every year. Once you're over that amount, the taxing begins by the regular brackets, right? So if you're not making much, then the first I think the first bracket would be like 30%. And that if you get over a certain amount and you're considered a high income earner, then that very, very quickly gets up to 40%. But if you're running it through a corporation tax, then you can kind of do this thing where you pay the 21% of corporation tax and then you pay yourself out with dividends and stuff, and it kind of works out a little bit less. But yeah. Joe, I'm not looking to do anything right now on copper because it's I have some stronger levels apart from IB. I don't think that IB is strong enough for this. So I am not actually planning anything. My mind is open to both sides of the story at this point. So I'm not looking for longs, I'm not looking for shorts. I'm just observing. I'm just observation mode to see where they want to take it and how they want to behave. The initial balance is very small. It's very small. This is the initial balance. And right now it's only 28 ticks. That's like peanuts. So I'm guessing we're probably going to end up in a neutral day. And I'm guessing that we're going to wag on both sides, which it's not really what I want to see because that means scalp territory. I'm not really into scalping on Monday, to be honest. So maybe I'll just, wait until some major levels are hit. But basically now if we go higher, we do have VWAP. And if VWAP manages to stop the further progression upside and we hold the top range of the initial balance high, maybe, just maybe, that would be a good short. But I'm not going to rush into it because that's just a hypothesis that I have. The initial balance is not big enough for me to run a standard failed auction trade if they fail the auction, because it would leave me with only a few ticks. Now, typically, I like to use about 28 to 35 ticks stop loss for copper, and therefore, if I don't have enough space for the core setup, that means it's not worth my time. So if I don't have at least sort of 2 to 3R available, really 3R would be better, so that I can then take it off at 2R if it doesn't progress further, right? I'm just not going to get involved. Like, to me, it's just a waste of time, Thoughts on crude. Crude oil is in rollover, and I'm not going to do anything in rollover because I hate trading the rollover, especially nowadays where crude is still very touchy. It's like still moving, approximately $1 a day, which is like so low for crude oil. If I do anything, it might be on RBOB very, very late in the day. I've said this before that crude oil for this time of day, that's not where my edge is. Like, I don't trade crude oil in London. I trade DAX in London. And most recently in the last year, I've been trading copper and platinum. But, crude oil in rollover and London, like, do you want more trouble your way? Do you want your job to be even more difficult than it already is? Like, why? Just don't. So yeah. Okay. Do you attempt to trade NKD? Yes, but only if we've had FMC rate decision and only if we need to reprice. I don't fancy staying up all night to trade Nikkei very frequently because I need my sleep. I have a chronic illness and that kind of puts a wrench in the works anyways. So I need a lot of sleep anyway. But yeah, Nikkei, I will sacrifice sleep if we've had some big change that nobody expected. So really Nikkei trade for me is maybe a trade that I will take, several times a year. But yeah, it's not very often. DAX is nearly an everyday trade for me. Nikkei, not so much. So, that's like the middle of the night for me, man. It's like my days of being a night owl are long gone. But yeah, it's the same. You have to look at the levels, you have to look at the options activity, and then typically what it tends to do, sometimes it does almost like if it's going to be a quiet night, and you got it wrong on Nikkei, what happens is that it does like this big move all in the space of 2 candles, and usually it's like one is a green candle, the other one is red, or vice versa. And then for the next 4 hours, you're like watching paint dry. It stays within that range. So this is where I don't get involved there. Typically, this would be the Open, Tokyo Open. So I like to get involved after like 1:30 a.m. my time. And that means that I have to stay awake from 1:30 at the very least, all the way up to about 4 or 5 in the morning. Now, obviously, I do these shows as well. So when I do that sort of a trade, I know that I'm not going to sleep much, and I'm just like completely wrecked for the rest of the week. So I have to be, very choosy. So I need to make sure that statistically we can have a possibility of a very big move to make it worth my time. Otherwise, I'm not going to be trading every single session out there every day. There's no need. But yeah, every so often, like I said, 3-4 times a year, yeah, I will do a Nikkei trade. But it's not my core market. Would I like trade Nikkei all the time? No, I would not. Let's have a look at, let's have a look at crude oil, I suppose. Somebody's asking about the crude oil thoughts. Starting on a very big time frame. Now, all of these levels are old levels. So let me just see what's going on in the options. Did we roll already? No, we didn't. It's a bit odd. We're probably going to roll like today, so I don't know what value this analysis is going to have, because we're going to have like different prices. Let's just see, CME. Quotes. Yeah, we've already rolled into May quite heavily. It's like everything is so split. This is nothing. Like, this volume is terrible for crude oil. Usually crude oil has like 190,000 contracts. This is like quite pitiful. So yeah, I don't know. It's the 17th. Usually they roll this week. So I would expect any day now for crude oil to roll into this next month. But they have to roll it, like the thing is, they have to roll it because a while back I was talking to Mick why the platform was rolling at odd times. And he said something about they have the platform set to roll like 3 days before the actual expiry. Now, usually it's the third Friday of the month, I think. Or is that... I'm always getting it wrong between the COMEX products that roll every last week sort of Thursday of the month, and then I can never remember whether it's like a Thursday or Friday. I know it's the third week, but it's like after all this time I'm still like, is it a Thursday or Friday? I'm not sure. But yeah, let's just say they're gonna roll any day this week. But yeah, because of the way this platform is set, I think they're probably going to roll well ahead of that. The volume is already greater in the next month, so technically that should be, it really should be coming in anytime. So yeah, the levels that I'm going to do, take it with a pinch of salt, because they might just change to a new contract, and then all of this is for nothing. But for now, we're still in that April contract. All right, so we have GEX1. at 68, evens. Then nothing down to 6750, which is an HVL. And I'm going to have a look at where the levels are from the profile. Far away. They're very far away. So 67.34 is the profile value high for London. But since this is more of a NYMEX product, I might give you the NYMEX levels instead. And that's a little lower. So 67.22 is the value high from NYMEX from Friday. 67. 67.06 even. Hmm, 67. Let's put 22. The 06 I think is something else. It's I'm a bit blind. So NYMEX. Now, because these are NYMEX specific, they will stay for sentiment until later on as well. 66. 83 is the value low. I need my reading glasses today. Point of control is 66, 62, but I know, sorry, 6707. Christ, I know I really need I need some glasses. Yeah, 6707. I don't know what the hell I'm reading there. I don't even know where my glasses went. It's like, love-hate relationship with the lockout feature. So many setups I missed. Why would you look at it as setups you missed? I would look at it as money saved, because you actually don't have any way of knowing whether the setups would have worked out or not. Whether the stop loss that you would have used was maybe the old stop loss and therefore not conducive to the to the high volatility that we are experiencing right now. I don't know. I think that's the wrong mentality. Oh, I missed out. Like, that's like FOMO one-on-one, right? Like, you didn't miss out on anything. If you've made money, you've made money. Like, you didn't miss out. I will never understand that thing where, somebody does a perfectly good trade that's within the plan. They take, like, let's say 2R. And then we have an outlier day that goes like for a million ticks. And they're like, I missed out. Like, you didn't miss out. You followed your plan. You took your money. You took the statistically viable target. Just shut up and be happy. Positives, man. Positives, not negatives. All right, so crude oil, we have the average session range low at 68.38. I'm going to try and read these correctly. We have the overall 24-hour daily range quantitative. Daily range high at 69 evens. And then to the downside, we have the average session range for the London session kind of matching the point of control. So it's like 67.08. But yeah, it's pretty much where POC is. And then we have the further 24-hour ADR low at 66.88. So couple of hypos. If we carry on higher, then I would expect at least the test of the value high, maybe even POC. then maybe a reversal. If we go into a value acceptance, so we go lower through the value area, then it's very likely to rotate all the way through to that ATR low. But yeah, for now, I would say value high would be a very nice point of interest for me. And if we are high enough and away from VWAP, I may even short it to there. But again, be careful because it's rollover. Price action tends to be very sketchy and twitchy and not really committed to anything. And then crude oil does these like massive sell-offs, shaking everybody out, making everybody absolutely miserable, only to reverse for like lunch hour. And this is something that you will see in rollover. So yeah, it's very, very tricky. But here are some of those levels that I just called out. So 69 evens is the average daily range high. So that is likely to stay for most of the day as an orientation point. And then your ADR low. Exactly 66.88. So very, very close to this NYMEX value low area. My voice is going. Gonna sound like Yoda soon. Do or do not. There is no try. All right, so those are your levels that are likely to stay for the rest of the day and as an orientation point for wherever we open up for NYMEX. But like I said, be very careful. It is rollover in crude. It is rollover in equities as well, which makes everything a lot more difficult. But yeah, that's what we're looking at. Yes. King Jones says, yes, there is the savage. Yeah. I mean, you know, I can be pretty blunt with some things that are complete nonsense. Especially you've made money and you're still complaining. It's just, shut up. It's like, be happy. Positivity, not victimhood. All right, let's go back to copper because this crude oil is just like annoying me. All right, so it looks like the copper is trying to fail the auction here. Like I said, the initial balance is really quite small. So I would expect to see maybe a neutral day fade at some point. I would like to see it up at value low and GX2. However, I'm going to widen that a little bit. So that's the zone that I want to see this at. That is where my trade needs to be from. All of this is just middle of nowhere for me. Yes, we have some puts here, but they were broken on the first attempt to the downside. They might stay reactive, but the more logical point for shorts would be up here. Right now, it's very undecided. Usually, if there's going to be a nice trending move in copper, it would already appear. So this makes me think that I should wait a little bit longer. I can see that platinum and copper are actually correlating a little more today. That's not always the case. DAX is breaking its initial balance. And it's at a swing extreme. So let me see if I maybe have a level there. Okay, with DAX, until we break below 22,960, maybe even 950, I'm expecting chop here. Because that's way too many levels for smooth price action. So no, that's not a setup. Man, what a boring Monday. Come on. It's like, give me something. You know, we all want to click buttons all day, every day, but if the levels are not there, there's no trade. Gold is trying to go back up to the value low. Let's go back to gold. And yeah, so it's actually pulling copper and platinum with it. Where's the value low? $3,003.8. So that's where the London value low is located. And do we have any notable levels? Obviously, we have the calls clearly at 3K. So that doesn't seem to be a level that anybody's reacting to anymore. It's quite interesting. It was pretty reactive on Friday because we kept kind of dancing around it. But then we finally kind of went through it. And then on the way down, it was just completely ignored. But it's still here, so it's not a gamma wall though. It's just a just some calls located there still. The gamma wall is up at 315, 3015. But yeah, ideally I would like this to fail here and maybe, you know, pull copper and platinum with it. But yeah, it's got some strength in it, and it is correlating with platinum a little bit. Not much. It's not like they're like, you know, twinsies. It's not how it works. Platinum will be pulled somewhat by gold. However, for the most part, it's got like a mind of its own. Because it's not like it's a precious metal, but it's not the same market. Yeah, exactly. Don't be a muppet. That's right. Don't be a grasshopper. Don't be a muppet. Wait for your levels. Nick Asari says, I want to ask, do you know, can we trade DAX in the future with Topstep? Do you know something about it? At this point, I know as much as you guys. So I've asked MP, obviously for over a year to get it. I was told that it will be available. It is still not available. They're apparently working on it. When it's going to be here, I don't know. I literally know as much as you. So I'm very sad that we can't trade it because, you know, London trading would be so much easier. But yeah, it is what it is, right? Like I said, I'm just one of the traders here. I don't... you know, I don't know how much power you guys think that we have, but, you know, that's probably the question for MP rather than me. Because, you know, I was told exactly the same thing that you guys were told. All right, let's see what copper does around these puts here, because that's the 0DT level that had quite a lot of interest. But again, you know, when Eurex was still trading, they just sliced through it. So I'm guessing it's probably not going to be that reactive, in which case we have room up to my value low in X2. Whether I'm going to still be on the stream when that happens, that's another question. Teo says, very good morning to you, Dee. Good morning, Teo. And he also says, good morning to everyone. Yes. So Joe, yeah, this is exactly why we didn't want to just short off the IB break. So if you're going to short off the IB break to the downside, you really need the whole initial bounce to be much higher up. So you need it to kind of represent the top of the swing, and then it's kind of turning around. But whenever it makes a swing high, then moves away, and then you get the initial balance for the next session, it means you're getting involved in the middle of the range and sometimes even bottom of the range, because the way I'm looking at this is the most recent low of the swing. So you're effectively shorting it. Like, you have to take a look at the location of the initial balance in the overall swing. And if that is not conducive to like a turnaround, if the initial balance was coming from, let's say this was the initial balance. So, you know, they got up there, created another pop, and then started to reverse. Then I would have been able to short. But, you know, over here, it's just like fraught with difficulty. And now it's created a neutral day type, which is not unusual on a small initial balance day. I was expecting this. But I'm also expecting a run up to this value low. So if we can break through these puts, then we have enough space upside. I mean, I can run a little feeler trade and then add into it if it gives me the opportunity. A little bit dangerous with 0DT puts over there, but I think if I use a 35 tick stop, I might be able to encompass everything. The initial balance is so small. We've gone over the VWAP, I think. Have we? I definitely need my glasses. Yeah, so we have some strength in the VWAP, so let's try that. But also 35 ticks. And then if it draws down against me, I can maybe add to get a slightly better average. And again, not a big trade. It's only more of a scalp. Scalp in terms of how many ticks I'm getting. That's one of the things that I look at when I'm determining whether it's a scalp or not. Not necessarily, oh, it's a breakout, so therefore we're going in. No, how many ticks am I getting versus what risk reward I'm putting in there? And anything lower than sort of 2R, to me, that would be more scalp. So let's see if we can get up there. Joe says, Dee, but do you consider this as a failed auction to the downside? Yes, but it's not playable due to the small initial balance size. So the initial balance failed auction, right? The failed auction. When it fails, you expect what? You expect it to rotate to the other side. How much space do you have on an initial balance that has a 28 tick range? There's nothing left, right? So it's not a playable setup. It's there as a signal on the chart, as a potential directional signal. We failed the downside. So therefore, now I'm looking for the next available area within the idea that we failed the auction downside. But the setup for the failed auction is not playable today, okay? So you need to have a sizable initial balance that will offer you at least sort of 1.5R to 2R multiples, and an ability to have enough time to get onto the trade. This one, with a small IB size, you would be guessing, because it's like, yeah, let's just guess that it's going to fail here. I don't like doing that. I don't like guessing. I like to look for the evidence of something happening first, and then jumping in. Not jumping in and then crying afterwards because it didn't happen the way I wanted it to happen, right? The opposite. We wait for the signal first. We see whether it's a valid setup within our, finely tuned setups, or at least my finely tuned setups. And then I decide what I want to do with it. Now, with this day, we have gold strength. So I am using some confluences here. We have a dangerous level here, puts 0DT, that were ignored. So I'm kind of hoping, we're going to ignore it as well, because this is a pretty strong push. We have double-sided auction now, so we extended the initial balance to both sides, but this initial balance is so small, so I'm looking for other references now to give me more context. So what is the context? We opened below value, we narrowly missed it during Asia, and that value low as a potential setup for the mean reversion trade, right? So go from the open with a gap up to value, that is still valid. The fact that the initial balance is so small, it doesn't play into the mean reversion setup. It's still there. So if the first setup would have been failed auction if we had the bigger initial balance. We didn't. So therefore, it appeared on the chart, but that setup wasn't playable. So what's my next hypothesis? A test of the value low and GEX2. That's what I'm trying now. So I'm effectively trying to get in on the mean reversion that started off with a very small initial balance. So let's see what they do with it. I got the strength from Globex VWAP, so that's good. That's a good thing. Like I said, not ideal that we have a two-sided auction here. Two-sided extension, not auction. So you have initial balance extended downside, initial balance extended upside. But there is a setup in my system that I've kind of modified from the original profile rules, where I look for the asymmetrical neutral days. And mean reversions are actually pretty good for that, especially if they start with a small initial balance. If it's a big initial balance, calling an asymmetrical neutral day is very unlikely because it's going to take, a million trades to actually get up to the edge. And then you would also ask for it to go much, much further than it normally statistically does, making the whole thing very, very improbable. So yeah. Whenever there is a setup, you have to ask yourself, is it playable, is it not playable? And if you don't have enough tickage in the range that you're looking at, rotation to the opposite side, then you have to have a different idea, right? You can still run the same directional trade, but you have to have different reference levels. Similarly, if you have a very tiny value area and you're like, I'm going to do a value acceptance based on what? Like you have like 5 points to play with inside value. It's like, it could be a scalp, yeah, and it's probably be a guess because on a small value area you don't have time to decide whether it's accepting it or not. So you just kind of have to PCP, pray, point, click, and pray, and that it's going to work out. That's why I'm very particular with the space that I have from level to level, and also from my quantitative algorithmic ranges, right? So if we get up there, we've seen it last Thursday, that 55.12 level in ES went down to 55.05, then reversed and shot all the way back up into a perfect auction trade up to the initial bounce low, and it ended there. So it was like a textbook bounce from the algorithmic range low. So everyone was like, oh, Dee, how did you get it? It's just data. It's not, it's data. I know that when I do those sort of setups and when I call those sort of levels, I look like some kind of a wizard and like I have some kind of a crystal ball. I don't. I literally just have time of day versus the level that I know is something that other institutions are looking at. There are algorithms that fish for those. And, it was against the trend. It was, everyone was quite skeptical. They're like, well, yeah, right, 55.12. Where'd you pull that level out from your behind? And I'm like, data, but yes. And then when it worked, obviously Jay and I have worked together quite a lot. And he took that piece of information. So I said 55.12. He saw the bounce. He saw the strength at one of his levels as well. So he was like, yeah, let's go in. And it was an amazing execution by Coach Jay. So that's how teamwork looks like, right? You have somebody who has an idea of what should happen at a level. And then something happens at the level. And then we're not in. But somebody else goes, hey, actually, I think this is going to continue because X, Y, Z. I have this level and that level, and if we see this, let's jump in. That's the collaborative trading. That's the part where, some people work better than others. And even though Coach Jay and I have some quite different styles of trading, we always come up with like very similar levels and, what we're seeing and stuff. And it never ceases to amaze me. It's like so beautiful. All right, so we're trying to get over this put level. Struggling. No single prints left anywhere. So right now to the downside, we have this excess. I don't have Bookmap open because my computer was being a little bit useless this morning. So let's try and filter out some of these time and sales. Actually, it's not that many trades here. All right, so that's 940. All right. Let's go down to a 5-minute chart here. The volume is not exactly great. I mean, is it ever during this summer day? But right, let's see. We have some, a few people on the one lots who are also looking to buy here. Let's have a look at somebody else jumping in, and then maybe we may have a push away from the puts, because they did go above it, and if you look very closely, they kind of tapped it from the top end and bounced away, but no one is really that committed here. If I know copper, it's probably going to happen like in a burst. So once we get somebody with slightly deeper pockets, they're just going to be like boom, 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 and then they're going to make a decision. Copper does these, it can be a little bit whippy sometimes, but nothing like DAX or, NQ or anything like that. But it can be a little bit jumpy. So sometimes they will do these like big whips of about 30 ticks just to scare everybody out. And then they orderly continue whatever they were doing. So yeah, just be careful of that. But otherwise, I don't know, they're not, let's see if they make a higher high here. I'm going to switch this chart to 100 tick just to watch what's going on. I mean, that's a strong push on a 100 tick chart. Come on. Everybody get out and push, like Hogue says. Elpar says, you do not use mentor blind levels? No. I use my own levels. So the mentor Q levels, like the options activity, is just kind of a little bit more of a helper thing. Like it's not be all and end all. So the way I use it, I have my levels already. And then if there's nothing else obvious, I may use one of the GEX levels around just to see how the price behaved around it. But for me to just use mental Q levels, it wouldn't give me the intraday sentiment, it wouldn't give me the open sentiment, I wouldn't know which side we're extending the auction to, I wouldn't know whether it's a neutral day, I wouldn't know whether it's an unusual day. So literally all I'm doing with mental Q levels is like a cherry on top, right? Is there any options activity there that could put a wrench in the works? And most times there actually isn't, and their levels very frequently match up with one of my levels, right? So today, value low, which is my stopping point for the mean reversion and potential starting point for a reversal at value, they also have a very strong X2 level. So that's confluence for me. Similarly, I think the projected one day that they have in the options is not too far away from my ADR high. So for example, their level is 497, my level is 499, but I also have the average session range, which is at 495. So literally from 495 onwards, that's kind of like danger zone if I want to run any longs and stuff. But, I'm always looking at how the price behaves around a level, and if there's no reaction, we're just going to keep going. And then as soon as there is a reaction, that's like, okay, well, somebody is obviously looking at this. So it's a much better way to live than, guesswork. If you're if you're thinking that trading is predicting things without having the probabilities and the experience of looking at things happening over and over again, you're going to be miserable. Like, we're not fortune tellers, There's no crystal ball or dowsing rods to ask. it's it's just probabilities. And hey, I've seen view up works to this side so many times. Is it going to happen again today? And then you look for evidence of that happening. That's a much easier way to live than going, oh, I wonder if I'll get the direction right today. Like I said at the beginning, I had no directional bias. I think Joe asked me, oh, what do you think today? And I'm like, I'm not actually thinking anything yet. I'm just observing. And once I get an idea of what they're trying to do, then I'll jump. Every time I try to, appease the chat and get a trade ahead of that, I always get myself into trouble because it's A, not following my plan, B, I'm trying to, do clicking buttons for, I don't know why to make sure that I do a trade. And it's just like, don't do it, right? So this is what Bruno just sent me. I see a 500,000 Lambo in your future. Yeah. Dallas says, good morning. What are your thoughts on pivot point levels? I have found them useful in structure. Yeah, so when I was still a new trader and I wasn't using profile, I used to look at pivot levels as well. They're useful. I just found them to be better as targets than any sort of starting points. So, for example, I will use, let's say we have this move right now. And let's say that I missed it. One thing that I would be looking for would be like a 50% retracement down to a certain area. So swing low, swing high, 50% down. Do we bounce from there and then keep going? And usually that tends to align with a pivot level of some sort. But looking at the profile and, some of the options levels and stuff, I honestly found pivot points to be completely superfluous unless they're lining up with one of the levels I already have. And I found that my levels are a lot more reactive because they're based on actual market maker activity. They're not based on, juju pivot points, which are basically just averages. That's what pivot points are. And similarly, VWAP is more reactive than regular moving averages because it's got volume component inside it. That's why I prefer it over regular moving averages. That's not to say that moving averages won't work. They will. It's just they won't have as much accuracy because of what they are. They're average moves. So if you have, let's say, a move that is that was done off this, let's say the put level, but you have a pivot point that's right up here. So let's say at 490.40. And then you're looking at that when you have a better level from the options activity at 490 evens. So which one is better? A random pivot level that's always going to be at weird prices, or the one that is actually inside the options activity and actually has market makers looking at it and potentially adjusting inventory around it. So it just depends on your strategy. If you find them useful, awesome, keep using them. But for the way I'm trading, I don't find them that useful. I will tell you one thing though. When I was still doing swing trading by default, and I was a young trader, this is like a very long time ago now, I was using the previous month missed pivots as targets. So let me repeat that again. Let's say that I was longing euro dollar. And we had a pivot that was made the previous month, but it wasn't reached in this month yet. So when the new month started, you obviously have a new pivot. But the previous month pivot is done and dusted. Whereas this new month, it depends how the month ends, right? So then you're going to have a done and dusted level. But the previous month was created. We didn't go there, still moved away from it. That was actually a really good swing target level. But, the more I went into intraday, I just gravitated towards more sort of auction and market making activity rather than any sort of random levels. that are averaged over a certain amount. But again, 1,000 folks, 1,000 strokes. Just because I do something one way, it doesn't mean that it's the right call for everybody. I found it, easier this way. You might find it much easier to just use pivot levels. Both are right. Dallas, so options levels are made by market makers, okay? So market makers typically have a lot of volume to fill. They are given a certain amount of volume per day, and they have to fill it. Now, these points where you see GEX2, put 0 DT, blah, 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 like call, resistance, gamma wall, those are areas where they're holding a lot of inventory. They have a lot of positions there. And then if those levels are reached, they will either take some off or add more. So it's not like, oh yeah, puts have to be, holding to the downside. They don't. But they're definitely an area where something will happen, right? There will be either an acceleration or a complete reversal. And it's not like to the tick. It still has, a few ticks leeway. Sometimes it is to the tick, but most times that happens when it's like at the exhaustion of a level, and we've had a very, very big level. Then you can see like a touch of the level and a complete reversal. It's just magical. But usually if it's like in the middle or it's a smaller GEX level that there isn't that much inventory there, it will kind of wag around it before it decides what it wants to do. But it's still useful. So market maker levels are the levels that you get from mental Q, and they have to do something there. They have to adjust their inventory there. If you have too many levels that are right next to each other, like for example, I saw DAX as like really bunched up levels today from 970 all the way up to 2303. Well, actually even up until 23,100. And it's just like too close together. It's like GEX5, GEX2, GEX4, GEX1. And that usually means that the price actually is not going to be very smooth. It's going to be very choppy. It's going to be like, oh, are we going up? Oh, no, we're stopping. Oh, let's go back down. No, actually, let's go back up. And then you get what? A consolidation, which is really annoying to trade. So I try to not get involved in those. I want clean moves where, from one area to the next, there's not much in the way of relevant levels. That way I know that I'm going to get a smoother move, quicker move. I'm not going to sit on it for like 5 hours without it moving anywhere. And, I've become very aware of when those sorts of situations happen. And usually it's when you have like a lot of levels that are close together. So let's say you're still inside the initial balance, and you also have a massive amount of GEX levels that are sort of printed all in like 10 ticks range from each other. That's terrible. I hate trading those. So, for my style of trading, I do need enough space from one level to the next. And I look for that. And I try not to get involved in anything else. And if there's no setup, there's no setup. Like, it's okay. I either move on to another product or I just sit it out. Like on Friday, I didn't trade Friday. See? Nothing. Took a day off. It's not that I didn't look. I looked, but I didn't like what I was seeing. I was like, well, this is annoying. And I decided that it's time to do something else. All right, so we have another 5 minutes. So if you've got any more questions for me, hit me up. And in the meantime, I'm just going to give you some links here. Now, since we're kind of split half 50-50 between US versus UK and EU people, I am going to give the payout club link. So if you've had over $5,000 in payouts, you can sign up for the payout club. And at some point, you will get a nice surprise. So you'll get the 5K club hat and pin, but beware, they're only shipping to the United States at the moment. So if you're outside of the United States, don't fill it out. It's not coming. Now, Discord is where we're holding our VIP classes. It is also where you have extra classes from some other coaches like Coach Ray, Coach Hoop, Coach Paul, I think, also does them. So check out our Discord. It's an additional resource for more education, more free stuff, and you can even meet our ambassadors in there if you need help with anything. And then finally, if you want to come and trade live with us, fill out the casting call form and somebody will get back to you. If you want to mix it up with the crew, we want you. So put your name in the ring, and yeah, we'll probably see you live. All right, so I'm gonna, stick around for another 4 minutes just to babysit this trade, see where it ends up, and then we'll be done. So yeah, I do have a few things to do today, so hopefully I'm not getting attacked by some kind of a flu or something. But yeah, come on, Copper, do something. Don't you know that I'm supposed to be finishing the stream? Come on. This is the London session with Copper. It's so sluggish. It does tend to pick up in about an hour's time, and this is also why I prefer to do these sessions a little later. Because by the time we get into the overlap, everything starts kicking up in volume. So by the time that I kind of start to get to the end of the London session, we start seeing those moves. And now, obviously, for another couple of weeks, I will still have to sit here watching paint dry. And then we'll go back to our regular 90 minutes into the London session, and we'll resync our clocks with the USA. Ugo says, short gold! Why? Tell me why. Those kind of one-liners, they're like so non sequitur. Like, imagine me coming into like an NQ chat and just going, short Copper! It's like, what? You having a stroke? Like, what's happening? So yeah, give us context. If you say short this, explain why. Like, I can tell you why, but for now, I'm not really seeing a short. This is a pretty strong move, and we're actually leaving some single prints on the extension of the initial balance. So why short gold? It's like, it's up at the all-time highs, just completed the mean reversion, left single prints on the profile. Like, what is the decision there? So give us a reason, Ugo Stefanetti, why we should be shorting gold. And then, I'll consider it. Hypo is a hypo, but not when it's just randomly one-liner, non sequitur, It's like, I'd probably look like a complete lunatic if, during the main broadcast, I'm in the chat and I'm sounding like, longer, Bob! It's like just like weird products that they're not even looking at. Marina says, does London open at 9 a.m. or 8 a.m.? 8 a.m. UK time, but when the clocks are synced properly, I start my session usually 90 minutes in. However, because now I'm syncing to the Chicago time, it is basically 30 minutes into the London session. However, that's only going to be for another 2 weeks, then we're going to go back to normal. So yeah. Short gold is St. Patrick's Day. Yeah, that's not a hypo. Like, that's, Blake, I would go long gold as well. Yeah. Yeah, maybe not here. I was looking for a bit of a sell-off, but, short gold is not really on my whole radar. All right, thank you so much for being here. I see Anne-Marie has popped in here. Good morning, Anne-Marie. Very good to see you. Do I still blow combines sometimes? Very rarely, since we cannot have more XFAs. If you're in a live account, you cannot have an XFA. So even if I pass a combine, the only thing that happens is that the XFA will stay there in case that I even, I might draw down everything and then start again, or in case that I blow up the live account. So in that case, I have more XFAs and I get back to the funded level immediately, right? So I have, I think, 3 XFAs that are waiting in the wings in case that happens. But yeah, blowing up combines, like, why would I do it? Why would I spend more money on combines rather than taking it slow like I have done here and just, very sensible, 2-3 weeks to pass it. No stress, no pressure, no, rushing things. So very rarely will I actually blow up a combine. And if I do it, I do it on purpose because I'm just like, let's YOLO it. And, one of the times I was doing the reversal challenge and I didn't want to touch my practice account because I was running some stats in there. And they're like, oh, reset your practice account. And I'm like, I don't want to. So I used the combine. Now, obviously, in the reversal challenge, 9 times out of 10, you will probably blow up. Especially with the sizes that they've been doing. It's like, let's go 15, yeah. But because of the fact that I'm not, there's nothing for me to expect from a blown up combine. I don't gain anything if I pass it immediately. And I don't know, I don't think about it. So very rarely, if I blow up a combine, it's more likely to be a 50K because maybe I sized up a bit, but 150 is a little bit tough to blow it up with the way I've been doing things. It's not to say that I wouldn't be doing it if maybe I had still the prospect of doing XFAs, right? So if you want to get more XFAs and you're like, yeah, let me get this, and then you mess it up and then you reset, yeah, of course it will happen. But like I said, because of the fact that if you have a live account, you can't have an XFA, I just don't really have any inclination to do that. And I suppose that's a good thing, right? There's no rush, there's no stress, there's nothing. So no, I haven't really blown up recently. I've got to be very honest there. So having a single account has been good on that side of things. There's no temptation to do more. So I just run a combine, don't want to do subpart trading setups in the live. I run a combine, still, execute the trades in real time so I can show how it works and stuff. And if all goes well, I can show you stats, which we don't have on the live. I can show you how, the day went, how many trades that was, even though on these ones it's usually multiple entries and exits. It's like 1 or 2 trades with like scale ins and scale outs, but this platform just does it the way it does. And just shows you don't have to rush, just slow and steady, and you'll get there. Some of these were just like 1 trade on 1 lot, like the crude oil one. All right, that's it for today. Thank you so much for joining me. I will see the VIP class a little bit later on today. Still need to figure out what time that's going to be. It's probably going to be maybe like New York lunchtime or something. Because I'm not sure I'm going to be able to do it super early. But yeah, we're going to be doing the session definitely today. Anyways, STX trading, no stats on the live. No stats on the live. We don't have the analytics on the live. And we can, even if you export it, most platforms are not going to take it because it's a different thing. So for now, we don't have stats on the live accounts, unfortunately. All of the nice, shiny things that you guys get on the XFAs and combines, they come to us last. So, live accounts, because there's not that many of us, they're like, they'll survive. And I'm sure that at some point they're going to be adding it. But right now, it's not their priority. So, yeah. Anyways, I will see you tomorrow for another London session class. Until then, enjoy the main broadcast. Enjoy the Discord sessions as well. Thank you for being here with me. I'm a market stalker Dee, aka Deeyana Angelo, and this has been the London session on TopstepTV. Take care.